and long-term differences are getting somewhat oversold, and that coincides with this signal on the predicted true strength indicator. Now, it's important to realize that as of late, I'm going to point out a currency pair, for example, Euro-Swiss franc. Euro-Swiss franc has been heavily oversold, guys, for months. And the bottom line is it moved another 1,000 pips lower. So this is why we can never rely on one single indicator. We have to use multiple indicators to make sure that we're not missing something. And even with myself, with VantagePoint, VantagePoint takes into consideration on the Forex pairs the US dollar index, but in my trading I take it one step further, and I've gone back to VantagePoint and said, okay, I'd like to purchase the US dollar index futures contracts because this is of great interest to me, and for reasons I've already outlined, and the fact that the major currencies pairs that I trade are directly affected by this US dollar index. Now there's variations to that along the way, absolutely, but the reality is it does play a big part. So now that we've had a look at the US dollar index, we can clearly identify that we've hit a pretty significant failure in this 89 level. We're starting to move down, 3-day cross, the 8 and the 18-day. These moving averages that I have up on the screen, just to clarify, these are not standard or exponential moving averages, they're predicted moving averages. One of the main reasons I truly enjoy using the triple EMA crossover is because it doesn't use any standard crossovers. It only uses the VantagePoint predicted moving averages. When these predicted moving averages cross each other, I'm giving it better than 80% accurate that the market is going to move in that direction. When we're looking at this with the VantagePoint, we have a number of indicators we would look at first. We would go through the short, the medium, and the long term. Each one of these crossovers giving us an indication of where the market's going. So looking at the US dollar index, we can see that the short term is crossed to the downside. There's no reversal signal there. The medium term crossover, let's have a look at that. We can see here that the blue line has also bounced off the black line and is moving lower. Looking at the long-term crossover, going through this scenario on all of your setups will produce consistency. So there is nothing here that's telling me that the short, the medium, and the long-term crossovers from VantagePoint are all pointed to the downside. So there's really, if we look at the Euro-US, for example, the Euro-US is made up 57% of this US dollar index. So if this US dollar index is moving lower, in reality, how could Euro-US move lower to any great extent? Well, the reality is it couldn't. It's going to be pegged to this US dollar. This US dollar's futures contract is going to have a significant effect on the Euro-US and an indirect effect on the CAD, the British pound, and all these other things. So, you know, I'm somewhat repetitive when I'm talking about these things, but I want to make sure that everybody understands it very clearly. What's going on with Forex? With Forex, you're either buying or selling US dollars. That's largely what it is, unless you're going into those cross pairs. But those cross pairs are also you're indirectly trading the US dollar, whether you know it or not. For example, Euro-Japan. Before Euro-Japan can be traded, first Euro-US has to be traded, then US-Japan has to be traded. So it's technically a synthetic currency pair. So there's a dual transaction that's going on. You're just not seeing it. So very important to remember that. Now let's go into our trades that we've taken for today, and let's have a quick analysis, because we're actually in these trades. These are recommended trades, and remember, the trades that were put out, these are based on what's anticipated to happen, not what's already happened. So last night these trades go up on TraderPlanet about 7 o'clock p.m. Eastern Standard Time. I had looked at the VantagePoint software. I assessed where the market was going to pull back. If everybody had reviewed this, I had talked extensively about this area, the 3-day predicted moving average, 125.57. The reason why I suggested this area is because we have a fresh crossover on the VantagePoint software on this triple EMA. So if this market had been moving up, for example, and the 3, the 8, and the 18-day, there was a big separation between these moving averages. Let's say it was, you know, up in the 132 level, and the 18-day predicted moving average was down at the 124. I would certainly not be taking an aggressive trade at the 125.52 level. Now, looking at the VantagePoint predicted highs and predicted lows today. Now, you know, you might say, well, the predicted low is 125.35. Why would I go in at 125.66? Well, the reason is that these predicted moving averages have a dual purpose. The crossover tells us the direction, and the actual number provides us with a pivot point. A pivot point is an area in which the market will approach and then bounce away from. So looking at this, let's pull up our Vantage Point software. 125, or let's pull up the FXCM trading station, I should say. 125.52, the market is hit this morning and then bounced up by 40 pips. This is a very good illustration of what I'm saying is happening here. Great Britain, US, we'll get into that one in a minute, but a very similar dynamic is happening there. So what we're doing is I'm watching the equities. Euro, US, and the equities, there's a very high correlation. Whether those two, if the equities move lower, it tends to drag Euro, US, and Great Britain, US down with it and somewhat artificially strengthen the US dollar. So on this Euro, US trade, we can see that I identified, because we're in a fresh crossover on Vantage Point, which again I'll bring back up so everybody can see, the key level here is 123.72. So my stops in this particular case level. What I'm not interested in doing is getting caught up in this intraday back and forth between the buyers and the sellers, the brokers trying to push the market lower to wipe it out. Now, a very interesting, again, point of interest. If you review the different Forex websites, the different market analysts, even CNBC and Squawk Box, they were all saying that the Euro-US, they said this a week ago, that Euro-US was simply retracing in the downtrend and it's going to move lower. Well, the reality is I was putting out buy signals last week because Vantage Point was saying something completely different. This is, in my opinion, the biggest difference between single market analysis and intermarket technical analysis. I am looking at a number of different factors, and the bottom line is my signals were saying that Euro-US was going higher, essentially right off this 122.50 area. So needless to say, in my own accounts, I'm long Euro-US, and all my shorts have been cleared out. We can see the length of time. The last time we had a buy signal on Euro-US, we had the sell signal that took place back here in March, April. So we've been in a considerable. It's been a considerable amount of time that Euro-US has been moving lower. Now, if we take the correlation to this to the U.S. dollar index, we can see that it's basically 100%. As the U.S. dollar index moves lower, the Euro-US is moving higher. Now, the thing is, we got an early warning sign of that happening, and that's what we're looking for. We're looking at where the market's going, not where it's been, because where it's been is not necessarily going to tell us what we need to know. Where it's going is what I need to know, and I need to make that judgment based on a discretionary program like Vantage Point, looking at multiple markets. That's a very beneficial thing. So looking at this, we can see that we're getting a touch overbought on Euro-US, but we still have, in my opinion, room to extend. We're above the zero line. Our predicted medium and long-term differences are just moving over that 100 level. That's a bit of a concern also. So we're just going to go back into the daily report again and have a look at this. On the daily report, it's very nice and clean. We can bring everything up. Now, point of interest here, we can see that we're on this long-term indicator rate here. We were at 43. We're now at 103. That's gaining. The longer-term different predicted long-term differences are actually gaining strength. They're not losing steam. So is the medium term. Short term is softening one bit. We've gone from 135 to 91. And again, these are used to gauge the strength of the trend and whether it's overbought or oversold. So if we start getting up into the 180, 200, then we want to start thinking about taking profit. That's my opinion, using the, because again, the predicted short